It's estimated that baby boomers will pass on at least $84 trillion to younger generations by 2045. That's why they call it the Great Wealth Transfer. If you've ever wondered that, some of that money will be passed on in the form of IRAs. Here's tax guru Ed Slott on Morningstar, and he says you want to make sure that it's a Roth IRA.
Those are the best assets to inherit because under this 10-year rule for beneficiaries, most beneficiaries, non-spouses, have to empty the inherited account now after the Secure Act by the end of the 10th year after death. Same thing with an inherited Roth. But they can keep that inherited Roth growing for the full 10 years. They never have to touch it and take it out, all that accumulated growth and compounding, absolutely income tax free.
So what are you seeing when it comes to inherited IRAs, Steve? I mean, are clients seeing the value of setting up a tax-free future for their family?
Well, that's the big question that you have to look at it. The tax time bomb that we're passing on to our children. See, back when they started, the rules were, when you put it in, we're going to give you a tax deduction for it. It's going to grow tax deferred. And then when you take it out, it will be taxed as ordinary income. When you pass away, if you're married, it can go to your spouse. Then, when your spouse passes away, it can be passed down to your children, and they can stretch it over your lifetime, and you'll be in a lower tax bracket. That was what we were kind of promised back in the 70s and the 80s. Mm-hmm. Well, many of those are not there, and the Secure Act, as he just said, took away that stretch IRA for our children. That's not a product. It's just a philosophy. I'm only going to take out the minimum distributions. Secure Act got rid of that and says they got to bring it out by 10 years. So Ed puts it to the point, are you going to put a tax time bomb onto your kids?